All right, we are live. We have a lot to go over today. There's going to be five main things I wanted to cover today. Number one, what is the current protocol for seeing houses today? Number two, what are the mortgage guidelines and how has that been impacted given to various external factors? Number three, we'll talk about construction is actually no longer an essential service. This was updated not too long ago. We're going to go for number four, related to the market update. I'm actually going to do a deeper dive into San Mateo County and Santa Clara County so you can see what has happened in those markets over the last several weeks, week by week, and how things are starting to play out. And then number five, we'll talk about, I get this question all the time, should I refinance now or should I refinance later? I'll tell you the pros and cons and when it likely makes sense for you to do so. So number one, the first thing, the current protocol for seeing a house. Here shared on my screen is basically the guidelines that are shared for each of the counties. San Mateo County has its own, Santa Clara has its own, but for the most part, they follow in line with this. Most of it should be done virtually if at all possible. However, once they see it virtually, people read the disclosures, they may want to go see it. And if it's vacant, we can go see it together by appointment. However, if there is somebody living there, that is a different challenge altogether. So we'll have to work something out in those scenarios. But that's the current protocol when it comes to seeing homes at this stage. So everything's gonna be case by case, but the idea is that you want to do as much research that you can and use basically the walkthrough as the final decision-making point if you're gonna make an offer or not make an offer. All right, so number two, we're gonna go over the mortgage guidelines side. This was recently posted just yesterday. Mortgage credit availability tumbles to a 5-year low. And most of this is because of the tightening of the market when it comes to the credit side. A lot of the riskier loan products, such as there's several products like non-qualified mortgages where people in the past, as long as you're able to put 25% down, they didn't actually have to show income. So you had those programs that had been phased out over the last several weeks. Number two, banks are being more conservative right now as well. I've seen even jumbo loans, the refinances of those being significantly limited. I've also seen standard purchase loans for jumbo products increasing the percent down. So in general, it is a little bit harder to get loans, but there are still products out there. So you always want to confirm and check in with your lender to see if you are affected in any way. And if so, there are ways to do it, but you have to ultimately just confirm and double check. And if there is any sort of risk, we'll need to ultimately put in different contingencies in place to make sure you're protected. But it's something to be aware of that if for sure credit markets have tightened, but it also will impact not just new loan products, but also refinances. So that's something to be aware of. Now, number three is about the shelter in place and related to construction. So I partner with a general contractor, and we've been building out in-law units for some time, and we were just fine, even with the shelter in place previously. But because of the restriction that was implemented not long ago, now all new construction cannot be done. I think there's actually only one aspect which is considered essential, which is affordable housing. But that's significantly less than most of the things that are happening all across the Bay Area. So it's very difficult. And I'll go over later on about the market update. That inventory is very tight and has always been tight here in the Bay Area. But with this restriction, in-law units can't be done. Most remodeling work likely can't be done. So it just makes it a lot more difficult for them to continue their work, but also for new housing to come on. So I would suspect that everything will be pushed out at least 1 or 2 months until this gets changed. So this is newer, where construction was essential when everything else was locked down. but I believe just last week, now it's more restrictive and they can't even go out either. So in terms of the analysis, this is what I find very interesting. So I'm going to do two, one of San Mateo County, one of Santa Clara County. And I will share all of these links later on so you can have access to it. You can see this is the very first one, which is San Mateo County. And you can see the very big trends and changes that have occurred before COVID, we can say is BC, and after COVID, right? So the shelter in place in the Bay Area was, I believe, on March 17. And you can see the substantial drop of new listings in the county. I mean, on a week by week basis, it went 153, 146, and it dropped by basically 60% within a week. But you can notice that new listings have been pretty stable. So after that, it's been pretty consistent in terms of new listings hitting the market. I actually just signed a new listing myself in San Mateo. And so we'll be going through, and I'll likely go over through a video in the future of what I will be doing to market it in this environment. But as you can see, it's pretty stable in terms of new listings because people still need to sell, people still need to move, but it has been a substantial drop. And we'll go over what that means from a market dynamics later on. The other thing I wanted to point out is when the shelter in place happened, you can see the number of transactions that fell through. A lot of people backed out during that time because people were very scared. And over time, that number actually decreased, but it was still a relatively high number. However, anyone that's pretty much making an offer or at this stage, because we're about 3 to 4 weeks in, you're not going to see too many transactions fall through anymore because people have that expectation and people are aware if they're even going to place an offer to begin with. Because many people, right, they got caught by surprise, but now they may not even be in the market to begin with to even have a reason to back out. You can see the amount of the ratio, right, in the past of contingent offers in the Bay in San Mateo County versus pending offers. So the ratio initially was pretty low. It's about 20%, 25%, and it still was that way leading up to it. You can see after that week, this week, the contingent and pending is going to be a little bit different because most people had actually already seen the house that weekend, right? So they didn't need to have a contingent offer because they've already visually seen it. They're pretty comfortable if they were okay from a financing perspective. You can see the amount of contingent versus pending has drastically changed weeks later. So now it's almost half. It's a little bit better the following week, and now it's more like 30%. So people have gotten more used to it, but there's also significantly less offers and less going into contract than before. The other thing to note is related to the number of sold. Now, when it changes to sold, keep in mind, this is all delayed information, right? Because it'll change the status from either pending or active to sold once everything closes, so the close of escrow. Now, the close of escrow typically is, let's say 30 days these days here in the Bay Area, mainly because some things got prolonged. So you can see it was very consistent week by week, even all the way up until this week. However, this week, if you think about it reversely, the ones that are closing this week are likely still maybe early March or mid-March, because we're about 3 to 4 weeks through the shelter. But you can see the number of sold has dropped drastically. The other number that I'll point out is related to the listing canceled and expired or withdrawn. Right, this is an incredible number. In the past, 18 was kind of the basis point, 16. And then as soon as the shelter in place happened, 119 listings got canceled and pulled out. Now, it doesn't mean that they're gone for good. I've seen many of them just go, off market, but a lot of them are now wait and see. And if you think about it, it's rightfully so. For example, if you still live in the house, many people are very concerned with strangers coming into the house, and how do you ensure the safety and cleaning it? So unless it's vacant, a lot of people are just kind of waiting and seeing. But you can also note that over the course of time, as people are now familiar with the scenario, there's much less people backing out. Even at this point, you have less than the average in the past. So here you'll see the chart of that. You'll see the chart of that, of how that has affected in San Mateo County over time. Now, what does this mean though? If you look at the number of listings and you look at the number that's sold and that's going pending, the interesting part at this time is that ratio. So even though the buyer pool has dropped pretty significantly, as you can see, the number of offers, but the number of properties to be bought that are on the market has dropped substantially. So from a ratio perspective, people will always ask and think, will prices drop? The challenge right now is it's very hard because there's very little inventory. That's an inherent problem right now, right? So as you can see from an inventory level perspective, this is the month of inventory throughout the years. And we've dropped very substantially, and we're getting close. This is basically getting close to almost about a month worth of inventory. So you have this problem right now where there are still people selling, as you can see. There's still people buying, but prices are not really going to drop too much just yet because there's so little for people to choose from. And I would also argue at this point, the ones that need to be sold, there's people really need to move, so they're somewhat motivated. But I wouldn't suspect such a major drop at this time for those dynamics and those reasons. So that's a little bit about San Mateo. Now let's take a look at Santa Clara. Santa Clara County is very similar in terms of that, but you can see just the drastic change in terms of quantity. Santa Clara County is, in this case, about 2.5 times larger. So you can see the number of new listings were very high in the past, 400. But the trends are very similar in terms of the county. So new listings, very substantial every single week in early March. We can notice that it dropped substantially at the week of the shelter. And you can just see the number that have pulled out, that have backed out. All the ratios seem to be very similar in terms of the trend. So there's nothing too surprising here, but at least this is the live feed of the data in place. Same situation as for inventory. As you can see, the trends are still going down. In this case, in Santa Clara County, we're about 1.3 months of inventory, still extremely low. Especially people from outside of the area. I mean, these are just incredibly low numbers. So it's very little for people to choose from, even for those that are still qualified and still actively looking. One aspect that I did want to show here is related to the price changes. The price change is very interesting. So this is a chart of the sales price over time for Santa Clara County. This includes residential, single-family condos, and townhomes. We're only 10 days in terms of the market, in terms of the data from April. And remember, all of this is still delayed. So I would be more interested and curious to see how it is now versus the end of April. You can see still things were still trending upwards, which is very interesting. Yeah, I mean, I'm still ultimately helping some buyers buy right now, and some of them still have an offer due date. Some have multiple offers. I lost on a multifamily recently. It still had 8 offers, and we couldn't even go see the property because it was priced very low. So be very cognizant related to expectations. I wouldn't expect things to be much higher than market. I would suspect things are either at market or slightly below, but don't expect much of a drop. So this is Santa Clara County. For San Mateo County, the prices seem to have dropped at least for the first 10 days of April. You can see it was a very strong February and March. And then you can also notice that there's been a pretty steep decline right now. The challenge, though, is, as I mentioned previously, there's only so many properties that were selling. So I think the data point is a little early So I'm going to do this again at the end of April, so we can see how this ultimately plays out. But this will be very interesting to see, especially the longer that we are going through the shelter. So these were my two analysis, and this is all live data as of April 10th. Now, the next thing I want to talk about is related to refinances. So I'm getting that question all the time. Should I refinance now? Should I refinance later? You shouldn't think about refinancing of trying to time it. You should think about refinances as what is it relative to what you have. So I had someone that I talked to before, and she asked, hey, look, should I refinance? And I asked, what are your rates and what are your goals? And her previous rate was, 4.3 at a 30-year fix. I'm like, okay, based off of that, and if you can see what it is today, it probably makes sense to do so. Why don't you at least investigate and see if it makes sense? So it's all relative, right? I wouldn't think about trying to time it. Oh, this is the absolute bottom. Let's refinance now. If it's good for you relative to your goals and relative to like the interest that you're paying in principal, make that judgment call and then make it then. And if rates do drop again, refinance again later, right? There's many options out there where you cannot pay any costs from doing refinances. So take advantage of that, because you never know, right? The challenge right now is the rates right now are not lower than it was in March. And that has to do with various factors. Number one, credits have been tightened. You saw that on my previous post. Number two, banks are really busy, right? They're busy not just with refinances, they're also busy with, there are plenty of people still buying houses, as you can see. A lot of their own people had to move remotely, so getting that set up and getting that up to speed took time. The other aspect is they're also dealing with a lot of the small business products that have been issued just within a week. So there's a constraint from that perspective. So the rates likely can only drop so much at a time. Now, maybe over months, you'll see rates, significantly lower, but that'll take months to occur. And if it still makes sense for you relative to the situation, then it makes sense to go ahead and do so. So that's the suggestion related to the rate side. Everything is case by case. Of course, if you want to get an opinion, feel free to reach out. You can send me what you have, and then I can ask a couple of my lending contacts, and then you can make a decision whether to do it now. If not, at the very least, I'll have that information. If I do see things change, then I can let you know too, to say, hey, look, well, now it might make sense for you to re-engage. Do you want to have a conversation? So I do that for my clients as well. So those are the 5 topics that I wanted to go over this time. If you have any questions, feel free to reach out to me at any time. Happy to answer that for you. I will post all of these links on the recording because I will upload this to YouTube and to LinkedIn and other platforms. For next week, we're going to do something a little bit different. We're going to do a West Coast, East Coast comparison in terms of the markets that are happening then. I'll get one more week of information, so I'll include that to that report. Things may change, but I suspect things will likely have been stabilized at this point. As I mentioned, the people that want to sell will sell. The people that want to buy will continue to buy. I'm still actively working with buyers and sellers, just depending on their environment, their situation. So thank you for tuning in. This was the first one, and I'll see you next week.